Hello, folks. So you're once again welcome back to my channel. So this is a review on volatility 75 and what we are probably and possibly expecting. So as I predicted or depicted last week, that we're looking at this high, and then for those of you who have been on the channel for some number of days now, I told you that this high was our target. And price, I think when price was somewhere around this area, I told you this high was the target, and price quickly rallied up into it, and it has taken down that high resting above this. So the liquidity, the buy side liquidity resting above this equal highs here has been taken, and price rallied and ran through the highs resting above these areas too as well. So here beautifully you could see that there was a trend line phantom here, a trend line phantom. So price has quickly taken down all the liquidity resting above the highs in there. Okay, beautifully. Now, what should we expect? Okay, so today on my um group, on my WhatsApp group, as well as I think on my Telegram group, I posted that all the analysis there. I annotated the charts there, but I want to bring it to you live here. So I I indicated in the WhatsApp group that the market was going to be bearish. My bias for the day was bearish, and lo and behold, today the bias was bearish, and market traded down all the way to this point. So I mean, if you could have find a nice entry within and traded, would have been a good trade or good spot. All right. So what's my bias for tomorrow and then today? As we see, then there's a new market that's opened. What's my bias? Okay, so let's go down and do our analysis and see what's ahead. Okay, so um this is what I am picturing. This is what I'm picturing. So you could see that market moved from this high all the way down to this low, and moved all the way up in here, and then it broke down to this point, and then it has moved all the way up this way. Now what do you know, what are you seeing here? Are you seeing the breaker that has been formed? So necessarily, what are we expecting? We are expecting the price trades into the breaker. So now you see this full body candle. Okay, good, beautifully, we've seen the price has retraced into the breaker. But you see, when there's this continuous bullish candles, I consider all this as part of the breaker, because there's one continuous bullish candle that traded up all the way up here. So I'm looking at price retracing back into this area, and then what are we expecting? The price comes into the trace deep into the breaker, especially when we have some consecutive candles forming the particular breaker. If price should retrace down into this area, I'm expecting to give it a buy. So anything below this breaker, we are going for the ride into this fair value gap, and then consequently we look at anything. Sorry, this is not annotation on the chart, so it makes it a bit, let me clear it for you. So anything that is not inside this and a failure below this particular wick, I'm expecting that it won't be a buy. So anywhere within this area, I'm expecting a buy, but I'll go down to 1 hour time frame and show you more. So let's look at this. This equal lows resting below this area. So I'm looking at price, whatever price does, I'm looking at if price should fail inside this or trade below this area that I'm considering as my breaker. I'm looking for price to sweep in here, and then consequently sweep below this equal lows. Okay, so we have equal lows. Okay, so we have this equal low resting below this area. But I mean, should price not respect this breaker and then break beneath this level, we are expecting it to close in on the fair value gap. So I'm expecting this fair value gap to be traded to. So I'm expecting this fair value gap to equally be traded to. Should price fail below this level, should price fail below this. So I'm giving you concise depiction point. Should price fail below this level or go below this price point, we are looking at price coming into sweep on the fair value gap in here. So what is my bias for this day? Now let's go down. This is on the 24-hour time frame. So now should price seek for the liquidity on this sell side here, we have a very big fair value gap resting below this area, which is a nice area that price can easily sweep in, delve deeper into. Should price feel all the integrities given up here, we are looking at this sweep. Then we'll look at what price does next. Then we'll look at this. But should in case price doesn't fail with this breaker, we'll look at price going back into the sky. So we can set our trades in somewhere here. So now you have to filter. Let's go down to 4-hour time frame, or let's look at it on the okay. So 4-hour time frame is cool. So look at where the fair value gap begins. Okay, so we are looking at price here. Price traded here, came up, then I told you about this particular breaker. Price traded all the way into it, and then price traded back into the breaker a little bit below it, and then a bounce off. So now we consider this particular ones as some form of mitigation. Okay, so I'm looking at should price retrace. There's this fair value, small pocket of fair value gap resting in here that price could necessarily trade down into. Okay, and then sweep. So this fair value gap resting in this pocket here, price can just dip into it a little bit below, and then we'll look at should price not break below this, then we'll look at price going back into the sky. So you can take your trade somewhere around this area. And where do you put your stops? Your stops will either be below this area, or just anything below the breaker point is your stop. All right. Okay, so now if you want to also ride from the top to the down, what do we do? What trade setup must you look for? So on the 4-hour, you could see that price traded up, came all the way down this way. So now let me quickly draw them so that it's more easy for you to understand. So price traded up this way, traded down to this point, and went up to this point, and then traded down. It broke that level, it broke this level. So what do? We expect price to retrace back into the area of trade then. So price actually, now this is not breaker, this is mitigation. So the last bearish candle before the continual movement up, so you could see that price traded this way, this bearish candle here before the push up after the low. Okay, so you could see that price actually traded back into this particular area of trade, or in another way you could see that it traded into this order block here, the bearish order block here, and then price got rejected, and then it continued trading down. So what did it do? It's traded down into this area and then it came to sweep. So today's trade basically came to sweep on this low. Okay, so this sell side liquidity resting below here. So today's trade was, that was a target. It came to sweep and then it's gone back, closed in on the fair value gap resting here. The fair value gap resting in here. Price went to close in and then it traded back down. What is my expectation? So you could see that price has gone back to do something like this and you're expecting it to push down. Okay, so price has closed in on the fair value gap. What necessarily? Possibly price can still go in and take this high here, take it down before it rallies back down. Okay, so now let's look at it on the 1 hour time frame. Let me wipe this. Let's look at it on the 1 hour time frame and see how best you can execute your trade. If you are looking for, should price not go into this area and then go up before, where can you take a trade from above and then expect that reversal into? Okay, so beautifully you can see that there is this fair value pocket resting here and there are some almost equal highs in here, but I don't expect price to come in and close in on this area. So possibly what I can do is, what you can do is that you could see that price has formed this particular long wick candle here, and you can consider this long wick candle as a rejection. You could see when it traded, price traded back into it and boom, it traded all the way down to this point. So what you can do is that should price trade back into this particular candle or in this particular area and take down the high resting in here, you can quickly be a seller. Where do you put your stops? You put your stops above it, just above this high. You put your stops here and then you are good to go. So this is just a quick review on volatility 75. So tomorrow, which is today, is a new market. I'm expecting price either continue pushing down, or if it retraces back up, then we are good to sell. Okay, but generally my bias is a bearish day, so I'm expecting price to go to trade into premium before I seek for discount prices. Okay, so if I see anything, I'll post it on the Telegram channel for you to execute your trades. Until then, I wish you all the best in your trading, and do have a nice day. If you are new to the channel, please subscribe and share for others to like the video as well. Enjoy the rest of the day.